Hey everyone, and welcome back. So a couple of weeks ago, I made a video talking about my 2 worst stock market investments ever, and that video did quite well, and I got a ton of feedback from you guys wanting to hear a video on the other side of the coin where I cover the 2 best investments that I've ever made and go into the details of which investments I have picked that made me the most money. So that is exactly what we're going to do in today's video. I'm going to start off by sharing the 2 stocks that have made me the most money in terms of dollar amounts in the stock market. I'm going to briefly explain why I invested in those businesses at the time when I did. I'll show you when I invested in those stocks, what prices I invested at. I'll share the compounded return that I've generated on those investments since I purchased them. And then after I've gone through those 2 investments, I want to talk generally about how I'm able to so consistently make really good investments. What's the philosophy behind why I'm able to pick investments like the ones that I'm going to show you today? Just before we get started in today's video, there are a couple of things that I need to say. The first is that these are both open positions in my portfolio, which means that I haven't bought and sold and confirmed that I've made profits in these businesses. So in all likelihood, it's possible that when you're watching this video some months or years after I've posted this, that these may not be the most successful investments in my portfolio. They may go down, they may not continue to rise, and there might be other investments that do well in my portfolio over time. And the second thing that I need to mention is please don't use this opportunity to pull an eToro and use me as your copy trader.
With Copy Trader, just find a top investor on eToro.
Oh my God. Just find a top investor on eToro. eToro and the phrase top investor should never be used in the same sentence. Do not copy these investments just because I have invested in them. I guarantee you, if you do that with me or with anyone else, whether they're a hedge fund manager, someone else on YouTube, or anyone at all, I guarantee you, you will lose money. And there's 2 reasons why. The first is that even though I have invested in these businesses at the time of recording this video, you have no idea what trades I'm making in regards to these stocks or any other stocks after the video goes live, okay? You have no idea if I sold out of these investments because I learned some new information 1 week after posting this video. So that's the first reason. The second reason is because in these businesses, like every business on the stock market, there will inevitably be a time where the stock price for these businesses crash, where it goes down 10%, 20%, 30%, maybe even more. And if you don't understand the business, you will have no idea what to do. You won't know whether you need to add more, whether you need to hold on to that position, or whether you should be getting out because that stock is actually going bankrupt. It's going to zero. I think most of my viewers are smart enough to know that if you don't want to put in the work to analyze individual businesses, what you should do is just buy an index fund. Invest in an ETF that tracks either the US market, the global markets, or the Australian market, or whatever it is, and just passively invest into that. If you don't want to put in the work, that is going to be your best bet, because if you don't put in the work and you just copy someone's investments, you're going to lose money. I guarantee it. So there's your fair warning. And of course, everything that you do with your money is your own decision. So with that said, let's jump straight into today's video. So the first investment that we're going to talk about today is Thor Industries. And Thor Industries is the largest position in my portfolio, and it has delivered to me the second highest total amount of returns in terms of dollar amounts, right? So it's the biggest position, but it's only second in terms of how much profit it has generated me while I've held on to that investment. And for those who don't know much about Thor Industries is a global recreational vehicle manufacturer, and they're actually the largest in the world, and they're the largest in North America. So they have major operations in the US. They've been in that market for about 35 years. They also have operations in Europe, but that is something that has just developed over the past 18 months or so. So their major business is in the US, and they're also in Europe, where they have recently expanded. And like all of the investments in my portfolio, this business has many of the characteristics that we talk about on the channel that make it a very, very attractive business, and then a very, very attractive investment. So for example, the business was run by the 2 founders all the way up until 2013. 2013. In 2013, Bob Martin took over the position as CEO and has been the CEO up until today. And basically, Bob Martin and the founders previously have both worked together, and over the entire lifetime of this business, the growth of this company has just been outstanding and unrivaled. And they've been able to do it with a number of really good characteristics. They have consistently high return on invested capital, which is very, very unheard of for a business that operates in a very capital intensive industry like manufacturing vehicles. They have no debt most of the time. They take on debt here and there in order to make a strategic acquisition, but most of the time they have zero debt. And if you actually look at their compounded growth over the past, say, 20 years, they've been able to maintain double-digit growth, and in some cases 20+% growth over 15 years, 17-year compounded periods, which is just insane considering it's an industry that hasn't really grown substantially itself. It's that Thor Industries has been able to grow their market share so substantially in the US, and now they're beginning to do their expansion globally, moving into Europe, where they're primarily operating in Germany at the current time. And I started investing in this company quite a while ago, back in 2018. And what was happening in 2018 in the recreational vehicle market in the US was that the retail demand cycle was ending. So what typically happens in the RV industry is retailers are ordering vehicles from the manufacturers like Thor Industries, and retailers are adapting to the demand that they're seeing at the dealerships, at their retail level, right? So what happened in 2017 was there was a huge surge in demand, and the retailers weren't expecting it. And as a result, they started putting in a lot of orders to companies like Thor Industries. And in 2018, that kind of reached its peak. It reached a point at which the dealerships, the retailers, had ordered a lot of inventory from manufacturers, and then they had too much inventory. The demand slowed down, and as a result, all of a sudden, these retailers had all of these vehicles on their lots in their dealerships, and they didn't need to order any more from companies like Thor Industries. So that happened in 2018 and continued throughout the beginning of 2019. And as a result, the stock got killed. So the stock went from, during that period, about $155 per share down to about $100 per share. And this is where I made my first significant investment in the company. And at the time, as an investor, I was thinking this is a short-term event happening for the business, and once this sort of cycle comes back, the business's stock price will continue to rise. But what actually happened for Thor Industries is there was a number of short-term problems that began to stack up that kept pushing the stock price down. So another one that isn't really a problem on the surface, but is if you dig a little bit deeper, was that they made a huge acquisition of a company called Erwin-Hymer, and that was their first entrance into the European market. And why this is a short-term problem is because they took on a substantial amount of debt in order to do this, and the business was still in decline during the end part of this cycle. So a lot of investors, institutional investors, were concerned that they had taken on too much, that they had stretched themselves too thin to make this acquisition. So during this second problem that was happening for Thor Industries, the stock price continued to fall, and it went from about $100 per share down to about $45 per share. And you guessed it, I continued to invest while it was falling through this period. And then, of course, because one problem, two problems isn't enough for your first very significant investment in the stock market, we had the pandemic that happened. And of course, production was shut down at all of their factories for a significant length of time during March and April. And as a result, the stock continued to fall. And eventually, the stock sort of bottomed out at about $38 per share, I believe. And at a price of $42 per share, I actually doubled my position in Thor Industries. So I had invested, and for those who have followed the channel, you would know that I had invested a substantial amount of my portfolio into Thor Industries before the pandemic. Then the pandemic happened, and the stock was just so cheap relative to its future cash flows that I have predicted, or that I've projected, that I could not resist continuing to invest. And I invested the most significant amount out of all of those investments at about $42 per share during the pandemic. And I think that a big reason why the stock got hurt so much was because people were really worried that the business was going to struggle coming out of this recession, that they were going to lose a ton of money and risk going bankrupt because of the debt that they had taken on because of the acquisition. And I didn't sort of feel that fear. Looking back at their history, Thor Industries has never, ever had a year where they've lost money. So in terms of burning cash, that wasn't something that I was expecting Thor Industries to experience. And after the information came out, or data came out of the RVIA about how the industry is actually performing quite well relative to the previous year and even many years prior to that, I feel very confidently that in the short term, they're going to be able to manage their debt load. And over the long term, of course, I think that they have good prospects in order to continue to expand internationally and deliver significant cash flows to me. So now let's talk about returns. So how much has this investment returned to me? And I want to break this down into the total return. So just comparing how much I paid to what the stock is worth today. And then we'll look at it on a compounded basis. So in terms of the total return has been 37.5%, which is quite low considering that I started investing in 2018. However, as I mentioned, I made most of the investment in Thor Industries in late 2019 and 2020. So most of the money that I have paid to invest in Thor Industries has not even had a year's worth of investment returns, right? So most of it has happened in the past few months. So as a result, the compounded return makes a little bit more sense because it gives us a bit of a comparison between when I've made the investment and the returns generated on them rather than just the total return since I started in 2018. And that compounded return since I've begun through all of those investments has been 24.7% per year. And that figure is, of course, higher than the 15% that I'm aiming for. So I'm certainly happy with that. Although, as I said, this investment has mostly been made in the past year. So it hasn't really had much time to compound and sort of realize itself over a number of years. And the other thing to mention is that even though this has been my second largest return in terms of dollar amounts, it's actually the fourth highest in terms of percentage amounts. So it's the second highest because I've invested so much money into it. But on a sort of percentage basis, it's nowhere near one of my best investments. So now let's finally talk about the stock or the investment that has made me the most money in the stock market. And that stock is corporate travel management. And for those who have been watching the channel for quite some time, you would know that corporate travel management is a very, very new investment. And at first, I really didn't anticipate that this would be at the moment, it's the second largest position in my portfolio. I didn't plan on that at all, as I'm usually quite slow to invest in new industries. But ultimately what happened was I invested in it. It got really, really cheap. I couldn't resist putting more in. And then the stock did so well that it just became such a large part of my overall portfolio. The company, as its name suggests, is a global corporate travel management company. And again, like Thor Industries and like my other investments, it has many of the characteristics that make it indicate to us that it is a very strong business or could be a strong business. And then, of course, a really good investment. So things such as it's run by the founders, it's been around for about 20 years and has consistently posted 20, 30, 40% growth per year during that period. They have absolutely no debt and their return on invested capital is upwards of 15 to 20% per year. Now, when I first invested into this company, it was trading at about $17 per share, which was about 15 times the cash flows that the business was producing. And it wasn't actually that it was a 15 times multiple that made me invest in the company. I don't use multiples. I use a discounted cash flow. So basically, I have a projection of what I think their cash flows can be over the next 10 years and beyond. And comparatively to the stock price, it looked like a good relationship that I could generate a 15+% return. So that was when I started investing in the company. And after investing in this company, like pretty much every single investment that I've made in the stock market, it fell by about 60%. So it went from $17 all the way down to $4.50 in the course of just a few months, which is crazy. And along the way, I was making investments. So I made another investment at about $9.50, I believe it was, which was a decent investment. And of course, I thought it's gotten a lot cheaper. It was about 45% cheaper, and I still liked the business. Nothing had really changed, so I wanted to invest more. And when it got to $9.50, I thought that I was done investing in this company. I had invested, probably as much as I wanted to at the time, and it had gotten to a point where I thought, there's no way this company gets any cheaper. And then, as I mentioned, it went from $9.50 to $4.50, which is just insane if you look at the numbers of this company, even just at a top level. But basically, at $4.50, it was trading 4 times its cash flow for owners, its free cash flow numbers, basically. It had no debt. They're growing at 30+% per year, and they had a 10+% return on invested capital, which is insane to me that it got that cheap. So, of course, I couldn't resist. And I actually made the biggest investment out of the 3 times that I purchased corporate travel management stock. I made the biggest investment at $4.50, and that makes complete sense if you understand the principles that I follow, because during that 2 or 3 month period where the stock went from $17 to $4.50, nothing fundamentally changed in the business. Nothing happened to the business. The risk factors were the exact same as when it was at $17, and the future prospects of the business were exactly the same. So the only thing that changed was the price that I had to pay for that investment. So I was very happy to invest a substantial more at 4 times their cash flow for owners for a company that was likely going to continue to grow that figure at a substantial rate in the future. And at the time, it was obvious to me why most travel-related businesses were getting their stock prices slashed, why everything was going down, but it wasn't quite clear to me why corporate travels in particular got hit so hard, particularly considering some of their characteristics that I'll explain in just a little bit. But obviously, with the pandemic, there was many restrictions on travel, particularly on leisure travel, just traveling for fun or for holidays. And as a result, a lot of travel businesses, airlines, cruise line companies were struggling. They were genuinely struggling. They had tons of debt. They were issuing shares. They were struggling to stay afloat. But I did not see the same thing with corporate travel. They had no debt. They did no business in leisure travel. So it was all corporate travel. And a substantial amount of their corporate travel was essential corporate travel, which was unaffected by the restrictions. And the other thing was that during March and the height of all of the restrictions, particularly in Australia, the CEO was coming out with updates basically saying, hey, everything's fine. We've got plenty of cash. A lot of our clients are still with us, and we're going to be fine throughout this pandemic. And what I really saw was a bunch of articles coming out and a lot of negativity around corporate travel. And I think a lot of people just didn't believe the CEO. And this is where trusting the management team, I think, is super important. You need to really make sure that you trust the management team. You kind of need to know the management team. You need to look at the history of their communications with the shareholders and see if they've been dishonest in the past. If there's been times where they've lied or they've avoided talking about sensitive topics, then you can't trust that management team. You can't trust that CEO when he's telling you something important. But in this case, I'd done my research on this CEO. I trusted him, and as a result, I was confident in investing significantly in this company. And then ultimately what happened was a couple of weeks ago, their full year results came out, and as the CEO had been saying all along, their business is doing fine. They're doing great. And as a result of that, the stock just exploded because this business is in much better position than other travel-related businesses, such as a Flight Centre, for example, which recently had to issue more shares and basically dilute the shareholders by doubling the amount of shares outstanding. And that was after the stock price had been significantly cut as well. So where we're at today for corporate travel is the stock is at about $15 per share, which means I've made a return of about 110% since March of this year, which is an insane return, not something that I anticipated. But as I said, the stock was just disgustingly cheap at the time. I still think it's quite cheap relative to its cash flows, even at $15 per share. Not that that's a recommendation or anything. I'm personally not buying any more. But I think that it got so disgustingly cheap pulled down by everything else in the travel industry, that it was a stock that I just couldn't resist pulling the trigger on. And I know that this video has been quite long, but I just want to give a summary at the end here about how I'm able to make investments like this. And if you look at my portfolio, I actually only have 6 individual stocks in that portfolio. 2 of them are tiny positions that represent about 1% combined. And those are the 2 investments that are in my worst investments ever video that you can go check out. And then the other 4 investments have all done extremely well, these 2 being the 2 that have made me the most money. So how do I have a portfolio like that? And the way that I'm able to do that is I don't build myself a portfolio of 30 businesses, of 50 businesses that I barely understand. I take my time investing and I make sure I deeply understand how each business functions. I need to understand how everything works, and I need to be able to reasonably project what the cash flows of those businesses could be. And those 4 businesses that I've done really well on over the past couple of years, they are the only investments I've made over the past 2 and a bit years. I've made one every 6 months or so. And in 2019, I didn't make a single significant investment in any of those businesses. And at the end of the day, I just feel so much more confident in my investment decisions when I have a really small portfolio of businesses that I can keep track of, that I all deeply understand, compared to if I had a portfolio of 30 companies that I really didn't know much about any of them. Because the reality is that whenever you're investing, there's going to be volatility. These stocks will go up, they'll go down significantly. And if you have 30 stocks in your portfolio and one of them goes down 50%, are you really going to know what to do? I don't think most people will know what to do because they're not keeping up to date with the news. Whereas whenever each of these businesses in my portfolio, and to the 2 that I spoke about today, when any of them have fallen significantly, I've known exactly what has caused the fall. I've known exactly whether it's a good idea to add more, whether it's a good idea to hold, or whether I should be getting out of those investments. So that's the way I go about it. If you want to learn more about that strategy, then of course, check out some of the other videos on my channel. But other than that, I hope you guys enjoyed today's video. Leave a like if you did. I put a ton of effort into making this one as always, and I'll be down in the comment section answering questions as this video goes live. So head down there and let me know your thoughts as well. But other than that, hope you guys have a great day, and I'll see you in the next video.